Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on euro currency. It's actually market start moving in the direction that we have discussed. In general, if even to not pay attention to some fundamental background and following just the technical picture, suggesting that, for example, you do not know anything about what has happened last week, about European Central Bank statement and so on. Technically, you could say that just market stands at a strong resistance. So this is daily confidence resistance, including the major Fib levels 1560, and it's also daily overbought. So definitely this is not the area where you would like to go long, where you would like to buy EUR. You prefer to wait for some pullback, whatever it will be, but following the current harmony, we suggest that it may be more or less harmonic to this left shoulder. It's approximately around 1250, maybe 113 at least. So we're considering this level. Currently, overall action looks a bit slow, and well, with the current performance, it's difficult to count that market will drop back to the 113. But we should not forget that CPI release stands on Thursday, and this CPI release could well bring some common sense to currently to the position of the investors. It's just because, well, investors were too fascinated with the promise from the European Central Bank. But as you understand, to promise to marry, it doesn't mean the same as to marry. And or another proverb, this means promise a lot, but so what? So this is just promises. So maybe we will change the rate, maybe we will do something someday. At the same time, United States dollar stands right at the eve of the rate hiking in March, and maybe right for 0.5% at once. Fed stands at the eve of the quantitative tightening. In the current circumstances, it's difficult to suggest there will be some massive sell-off. So I think that investors gradually should withdraw some emotional component in the recent rally and take the reasonable and logical view on the current situation. Besides, on the cross-market analysis, if we'll take a look at 10-year yield, today you could see that the market is trying to move through the 127 target of the butterfly. So it was standing right here just for 2 sessions. I don't know, maybe this is not the breakout, maybe just this is some performance around the target before the pullback, which is theoretically could happen, but rising interest rates in the current circumstances definitely supports the retracement on euro currency as well. So that's why I do not see some big reasons to change something in our view. Let's keep watching for a possible pullback and not to hurry up with the position taking, because, well, technical pictures suggest that retracement should be more or less significant, should be moderate. On the 4-hour time frame chart, take a look that we have cut the double repo sale pattern. So we have thrust up with the reversing bar on the top, closing below 3/3, closing above, and closing below again this Monday open. So this completion also the steep OP target, which is makes agreement with the same daily confidence level. So currently, as I said, overall price action not very fast, which is not really very good for a double repo, because this pattern suggests fast downside acceleration. But it just has been formed, and today is just Tuesday, so let's keep watching. If you have taken the short position, that's great. You could move stops to the break-even probably, or anyway, your risk will be very small. It's just because everything stands around this consolidation. If you do not have taken it, well, I do not know. Currently, you will have to place some stops that will stand higher, and performance on the hourly chart will currently take the shape of the triangle, which is, well, as I said, not very good for a double repo, but if we will still get some fast acceleration down here, some fast breakout, this will be okay. So this means that double repo will work. Following this pattern, which suggests usually at least a 50% target of the thrusting action, which stands around 113, actually that's the reason why I suggest that it should be somewhere to the 50% of the thrust, some retracement, maybe on the background of the CPI numbers, or even to the 618 around 112.60. It also could happen. But let's also keep an eye on the 1350, this confidence support, which maybe also could work as a support area. So it's still worth speaking somewhere in this area. We could start thinking about taking a long position with possible upper continuation of this very strong, fast action. So currently, mostly everything stands, as you see, the same. So downward action is starting. And now we just need to wait when it will be over to consider possible entry on the long side.